Vincenzo's Go Crypto Investing, and this is a quick housing market update. I had a subscriber about 2 weeks ago donate generously to the channel and ask for a housing market update. And as you know, I think we're going to have a housing market problem coming on, right? As I think the financials in this country, the United States of America, are not looking great. You can see annual inflation rate in the U.S., and this all goes and gets incorporated in with the housing market. Annual inflation rate in the U.S. accelerated to 6.8% in November, highest since 1982 when Paul Volcker was the Fed chairman and Ronald Reagan appointed him to save the dollar in 1980 after we had runaway inflation, and he rose interest rates to 20%. We're at 0 to 0.25 right now, right? And in line with forecast. In line with it's way higher. It marks the 9th consecutive month of inflation stays above Fed's 2% target and rising, right? Energy costs, the biggest gainer is 33.4 versus 30% in October. So you had a 33.3% gain in energy in November after a 30% gain in October. Gasoline, 58%, right? Inflation also increased for shelter, 3.8% versus 3.5% the month before. Food skyrocketing 6.1% to 5.3%, right? And inflation's running away. When the Fed and the Fed chairman and the U.S. government was coming out in the mid to late 2020, in the early 2021, this year, they said inflation would be transitory and would stay, briefly rise above 2%, maybe 3%, and then come back down. It's at almost 7% the way they calculate it. And as we know, the way they calculate inflation with the CPI, the Consumer Price Index, is manipulated, as they do not have food and energy incorporated into that, right? And they massage the numbers in the way they calculate it, right? They use owner's equivalent rent, which means if you own a home, what would you charge yourself rent? And they go by that rent per year instead of home prices last year in 2020 to 2021, year over year went up 20%, but they said rent only went up 3.8%. So in the inflation, the CPI, there's only 3.8% increase in rent when it should have been 20%, right? Your real inflation numbers, if they calculated it like they did in 1980s and 70s with Reagan, it'd be about 15 to 17% right now, not 6.8%. But you can see consistently 1.4, 1.4 in January, 1.7, 2.6. All here they were saying it's transitory, 4.2, 5, 5.4, 5.4, 5.3, 5.4. They were saying the inflation was tapering off and would start to go down. Then 6.2 and 6.8 now, you can see it's not going down and it's only going to get worse. And now they're talking about ending tapering by March of 2022 and raising interest rates 3 times starting in June of 2022, a quarter basis point for 3/4 of a basis point increase in 2022, followed by 2 rate hikes of a quarter basis point each. So that's a 0.5% in 2023 and then another 0.5% in 2024, taking it up about 1 3/4% over the next 3.5 years. They're never going to get that high because the stock market's going to collapse before that and the housing market would collapse, right? So high inflation is good if they keep printing money. It'll make your dollar amount in the housing go up, but it'd make your purchasing power go down, right? But now what we start to look at, well, if we're talking about the housing market, now that we've established inflation's high, the Fed's talking a big game, and as the next 2 or 3 months go by, you're going to see as they start their tapering, they're saying $20 billion up from $10 billion a month, they're going to taper. You're going to see the stock market get really choppy and have big crashes, right? So pay attention for that. But here's what you need to watch out for, my subscriber, if you want to know about the home supply, right? These are 3 big areas to watch, right? The first one is the home supply numbers, and this is all the data they give us, right? Oh, what the fuck? Spilt water on my keyboard. Hold on, I gotta dry it off. Come on. This is all the data they give us for the home supplies, and how you read this. The lower this number is, the less homes there are in the market. Come on, dry off. The less homes there are in the market, right? And the higher the number there are, the more homes there are on the market for sale. So if you look back at the chart, you can see from the late 90s all the way to 2004, we were steady at about 4 on the index, fluctuating from about 2.5 to 4.5 to 5.5, right near all-time lows. And when you're in this period when it's very low and it's stable, the housing boomed. from the late 90s through about 2004, 2005, right? The housing market boomed. They thought the housing market could only go up. But then you see late 2004 into 2005, late 2005 really into 2006, because you came back down for one last, staying in this pattern right here, right? And then you broke up starting in 2006. And this number quickly went from near an all-time record low of 3.75 about, and it jumped by about 2007 all the way to 8. And then that's when you knew you had a housing market problem. And housing market, they were constantly going up 10, 12, 13% a year right here. And then as soon as you hit this and you went from 3.5 to 4.5 to 6, the housing market started to tank and people thought there was a problem, right? And then you run your way all the way up to 2000, about 10, and you peaked out at 14 at the peak of the housing market collapse. Most houses were down 40, 50, 60, 70, even 80%, right? And then you can see from this point down to 2012, the housing market stabilized, right? The housing market stopped going down and started recovering some of its losses, but nothing through late 2012 was really significant. But as you pushed your way into 2013, 14, 15, and 16, you see another near record low looking like this from the late 90s to the early to mid 2000s. Housing market started skyrocketing again, right? You got a little bit of a hiccup in 2019 when the Fed started tightening and tried to do a rate hike late in 2019, and you had a stock market collapse. You had the biggest stock market collapse on, I believe, Christmas Eve in history. We were going into a recession, maybe a depression, and then the Fed halted course, lowered interest rate, and started printing money. And then you had a subprime or overnight repo collapse too in late October 2019, right? And then these crashed. And during COVID, you got to your record lows in March of 2021, just like back here in 2006, right? And everything was skyrocketing. And for these 2 years here, 2020, 2021, you had a 20% increase in home prices. But now as this gets back up, you came all the way up to almost 7. Now you're retesting. If you see this, as we go to our next slide, and we zoom in just the last 5 years, if you see this, start holding this level and shoot up to 8, 9, breach this level that was at about 9, the housing market's going to start tumbling now as this starts to rise. You're already seeing right now Zillow in the home flipping market, and this is what you see at the top of a home bubble. Zillow got trapped trying to flip houses, and what happened? They had to fire everybody. They lost hundreds and hundreds and hundreds of millions of dollars. Their stock price is down 60, 70, 80%. And they're just fire selling those houses out because they got caught. And that's the kind of stuff you see at the top of a housing collapse, right? And that's what you're going to look for with that. And here's your last 4 years. You can see January 2021, we were near record lows. February, we came up a little bit when the crunch happened. Then March, record low. April started moving up, right? May, June, July, you hit 5, then you went to 6.5. Now you got a little retest of your lows. If this starts to turn around and go up, this is your key level to watch, right? Your consumer, it's your home supply. You can go to the St. Louis Fed, which is where this is, right? This is the St. Louis Fed, United States. This is the inflation rate, but you can go to the St. Louis Fed, and they'll give you the home supply, right? Might even be in here. You'd have to switch to housing, and then this is what you want to be on. It gives you everything you need to know about what to look for. Home price. They got home supply, home starters, home index. I don't know if they got home supply on this one, but the St. Louis Fed has it, right? And you got to watch that. That's the big thing you need to watch. And right now it's going up, right? Here's your core CPI. It kind of follows the home supply. The higher and the core CPI goes, the more homes there are for sale. You see that? Anytime this starts to pump, you had a big housing problem and a financial collapse, right? Core CPI actually was collapsing going in last time with a strong dollar to the financial collapse, right? Then it started coming up a little bit right here, but not really. But you see core CPI now is way up there at 4. This is minus food and energy, right? It's the core CPI 1 year skyrocketing. You can see when they were telling you it was transitory, 1.6, 1.4, they were saying we had deflation to worry about, 1.3, 1.6. Then it jumped up to 3, 3.8, 4.5, 4.3, 4, 4, 4.6, 4.9 in November, right? Very bad. And then you look at the overall inflation rate is slightly higher than the core inflation rate because they don't have food and energy in the core inflation, right? But you can see we're at 6.8. That's very bearish for the economy, right? And then all years on inflation. Every time you have high inflation, 1980s, we had stagflation actually, and that led to 20% interest rates. Could you imagine what would happen with 20% interest rates? It'd be a disaster. I think the housing market's going to continue to get saturated, right? Let's take a look at the St. Louis Fed. Monthly home supply. Oops. So here it is. This is the site you want to be on for it. And you can see monthly supply of homes. And if you take a look back and you look at 1980, go look at, we were at an 11.6 with high inflation. Sounds familiar to now. Do you think you had a hot housing market? No, right? You had a shitty housing market in 1980, 1982. Then the housing market started to do a little bit better when there were not as many homes. Then you had a big stock market problem in 1990. But then right really from there, 1990, 1991, all the way through 2006, you can see it went straight down at record lows from 4.0 in 1998, still at 4.5 in 2005. This is where the housing boom happened. And as soon as you started to turn up right here, there was a problem. People started warning. This is where you're at now, 2005, and you're right here right now. You're in 06 where everyone can see the home supply getting more and more and more, and there's going to be a problem, but nobody knows it's going to happen. And then you can see from November of 06 at 6.6, pretty similar to this. November was 6.8, October 6.3, I think we were 6.8 it said. But you can see you went from 6.5 in December of 06 all the way, by the time you hit November of 08, you were at a 12, and you had a financial collapse, a housing market collapse, a stock market collapse, and the big banks failed and went bankrupt, and you had to bail them out. And then as soon as you turned around here, from 08 through 2013, the housing market stabilized and started coming up 15, 20, 30%, 40% from its lows, but still way down from their highs. But then from 2013, when the chart looked like that, all the way up until January 2021, when Zillow started flipping houses, the housing market started to skyrocket. But now it's going to start to stabilize, level off, and start to go down. And those year-over-year returns are going to get less and less. And then the month-over-month, they're going to start to go down. And then the year-over-year prices are going to start to go down. As this, I am forecasting to break up from 6.1. By the middle of next year, I expect this to be somewhere up here around 8 to maybe even closing in on 9, 9.5, 10. And then you're really going to notice that, and you're going to start seeing more people go belly up that are flipping houses, trying to make a quick buck, getting in over their head on mortgages they can't afford as interest rates start to rise, and inflation keeps rising, taking away more and more of their discretionary income, and more goes towards necessities, food, water, right, energy. And people start to not be able to make their mortgages, stop making their mortgages because they're underwater as their house starts to lose value, and you have a housing market not as bad as 08, but it could get very, very bad. But they're going to try to offset that by money printing, which could try to artificially inflate the house. But when you go to sell the house, if we went the way as Venezuela or Greece, it would have no purchasing power after. But this is your big thing you need to watch, the home supply. And you can see Zillow started getting in the home flipping business about August 2020. But by a year later, the home supply number went from a record low of 2 point something and has skyrocketed over 100% as the housing market and the houses that are for sale take longer and longer now to sell. And there's more and more of them there, which is going to drive the price down. And you're going to see in the next 3 to 5 months, this number break out from the 6.3 to 6.8 where it's at now, break all the way up, and it's going to start to be by the middle of next year. I think it's going to be 8 or 9, and then by early 2023, mid 2023, I think we could be at nearly 10 or 11 record highs in the midst of a housing market disaster. A financial collapse I think is coming. It's inevitable as they try to raise interest rates. You're going to see over the next 3 months as we progress our way through the rest of December, January, and February. As by February, we're going to have 20, 40, $60 billion in assets not being purchased. And by March, they're supposed to be done purchasing assets, bonds, T-bills, and all that other shit. You're going to see all these markets start to sell off because liquidity is not being pumped into there by the federal government. And then as they start talking about doing their first interest rate, the stock market's going to be collapsing, and they go to raise it the first time, it's going to be a disaster. Because if we raise, we're at about 0.0 to 0.25 for the Fed interest rate. If they raise it 1 to 1%, the interest on our nearly $30 trillion national debt will be 20% of our GDP. Can you imagine that? Just to pay the interest off, it's going to be 20% of the GDP at 1%, right? They can never do it. They won't do it. It's going to be a disaster. You guys need to prepare yourself. I've been harping on that for a long time. There's going to be a financial collapse, and you need to protect yourself by getting into the right assets and understanding what's going to happen, and have some physical gold and some physical silver bullion in your possession. 5%, 10% allocation of your net worth. Have 5% of your net worth in a gold bar. At least if all shit hits the fan and we have a financial collapse, you will not lose your purchasing power over the long term when your cash, just like your cash, you've lost 6.8% on the official CPI numbers in purchasing power, right? So if you had $100,000 in the bank, you've lost $6,800 already this year in purchasing power by it sitting there, right? And next year you're going to lose another 8%, right? So now you're down 15, 16% in purchasing power, 15, 20 grand in 2 years, right? And you can never get it back. It doesn't ever come back, right? So I'll give you more housing updates as this goes on. My man that asked for a housing update, I'll just go ahead and give you a weekly housing update, or a monthly housing update I'll do for you every time the Fed home supply numbers come out. Usually it's the end of the month. You can see November's update came out November 24th for October, right? So December 24th, it'll come out for the next one. I'll make a housing market update when the home supply numbers come out each month for you, my good man. Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.